Hey folks, Steve Papale here, 9:50 Central Time on Friday, June 24th, 2016. Well, we have some red on the screen this morning. Obviously, to state the obvious news of the day, Britain is elected to ditch the EU, and it comes as a pretty much of a surprise, clearly in the markets. In fact, over the last several days, stocks have kind of rallied in anticipation that Britain was going to stick around, but it became real clear last night. If anybody was watching any of the markets overnight or even early last night, like around 10 o'clock, SPOOs were down like 75 handles. And it's interesting because I didn't overly obsess with any of this. I don't know if anybody read the blog, or I wrote a blog the other day about it, but the bookmakers had about an 80% probability, just under an 80% probability that Britain was going to stay, that they were going to vote in favor of staying in the EU. Apparently these bookmakers who put these odds out have never, ever missed a call. So I think upon hearing that, and you know, the 80, close to 80% likelihood they were going to stay, and then their obviously record of 100% getting it right, I think the market sort of started to buy into the stock market ahead of the actual vote. What became clear is a lot of the people apparently in the northern part of the country came out in droves, and that was missed, I guess, by the bookmakers. So anyway, for whatever reason, they're going to leave. The markets, at least for the time being, are selling off. The U.S. market was down this morning about 550 roughly. Now, as of right now, we're down just under 400, so it's come back a little bit. Vols were up. The VIX was up around 20, close to 26, now around 20. So, VIX just isn't. It was low before. It's up somewhat now, but 20, it doesn't seem that high in the VIX to me. But whatever. Gold it's catching a bid. It's off its highs. And it's really more of a currency play. And I pointed this out a while in a blog. The pound is getting destroyed this morning. So, but the U.S. stock market feeling it. Overseas markets certainly feeling it. How this all plays out equity-wise, it's hard to say. I don't know that over time, how this is going to affect profitability of companies, etc. This isn't going to happen. This exit isn't going to happen for a while. I think this is going to take several years to actually affect. And then, what it does to companies in terms of trade and business relationships, unclear, I think. But nonetheless, the markets always sell off when there's uncertainty or surprises, and that's what we're seeing today. But anyway, what I wanted to do here this morning, and I'm doing this as sort of an initial recording, sort of an educational, quick 10-minute type recording on a topic. And so what I'm going to do here is I looked this morning, and I was kind of fiddling around looking at these markets, and I came across Cisco, and Cisco, obviously CSCO. I pulled up the matrix, and I mean CSCO as opposed to SYY, Cisco, the food service company. What I have here is this, and I was kind of just glancing over here at some of the options, the matrix, and I looked, and I see. Well, let me just point this out. Cisco's trading right now 28.30. Down 90 cents, 91 cents. So, and I look here at the 28 call, and I'm in July, okay, with expiration July 16th. There's 22 days to go. So I'm checking out the 28s, and I see they're trading about 65 cents. And then I look at the put at the same strike, the 28 put trading at 50, call it 55 cents for simple math. So we've got the calls trading at a dime over the puts. Now, if we think back on our synthetics, we know that if we buy a call and sell a put, we've created a long synthetic stock. Now, if I buy these 28 calls at 65 and I sell these 28 puts at, call it 55, that means 10 cents debit. And the math goes like this. If the call price is trading over the put price, in which case it is right now, you add the debit to the strike price. So I take 28 plus 10 cents, which is 28.10. I've created a synthetic Cisco share for the price of $28.10. And then I look up where the stock is trading and I say, holy smokes, the stock's trading at 28.30. If I go ahead and buy a bunch of these 28 calls for 65 and I sell a bunch of these 28 puts for 55 or 53 or whatever, I get to buy this stock for 28.10 or 28.12 and I get to sell it for 28. I get to make 20 cents every single time I do this. This is called an arbitrage, and back in the day or whenever, even now maybe for market makers, it's a great way to make a living, great way to make money, because it's essentially a risk-free trade. You've created a long stock synthetically, and you've sold a stock outright. So you're long a stock, you're short a stock, and you lock in that arbitrage, that price differential. It's risk-free. Obviously, if the stock goes up, I'm going to, for every dollar I lose in my short stock position, my short outright stock position, I'm going to make the same dollar in my long synthetic position, and vice versa. If the stock sells off, I'm going to make it in my short stock the same that I'm going to lose in my long stock position. Because remember, I'm long the 28 calls with a delta of 60, call it 61. I'm short the 28 puts with a delta of 40-ish. You add these two delta positions up and it comes to 100. Okay, and we're off a little bit just because of the way the model's valuing deltas here, but effectively when you do that, you've got a 100 delta, which is essentially a share of stock. So I'm looking at this and I'm thinking, wow, if I buy these calls at 65 and I sell these puts at 55 or 53, I'm going to lock in 20 cents. And if I do that 1,000 times, I'm going to make some money. So I'm thinking, man, I got to be the smartest guy in the world here, because no one else has seen this. So I'm getting ready, but before you do that, what you need to do is check it out. And so what I decided to do before I loaded up the guns here is I went into my dividend.com website, and I just trust me, it's www.dividend.com. It's if you don't have it yet, go ahead and get it. It's pretty good. It has all the dividend history and ex-dividend dates. So I went in and I said, what's going on with Cisco? Are they going ex-dividend anytime before recently coming up? And sure enough, July 5th, Cisco's going ex-dividend. Okay, and the dividend amount is 26 cents. You can see right here. So what does that mean for our synthetic? Well, here's what it means for our synthetic. If my position is long the 28 call and short the 28 put, and I'm selling the 28 or the outright shares, and I'm going to collect 20 cents. The one thing that I have not factored yet in is that dividend. Because I am going to be short the shares of Cisco, I am responsible for the 26-cent dividend. I have to pay that to the owner of the shares. When you sell stock, you're essentially borrowing shares. And it's my responsibility as the short seller to make good on that dividend to the person that I borrowed the shares from. So effectively, I'm on the hook for 26 cents. So now what I do is I reevaluate my math and I say, okay, I'm buying 63, 64, I'm selling 54 synthetically, same thing, 28.10. Okay, great. The stock's trading at 28, call it 28.30, 28.28. So I'm in it for 20 cents or 18 cents. But now what I need to do is subtract my dividend. because I'm going to lose that. I have to pay that out. So I take away the 26 cents from that. Now suddenly the trade goes from maybe a 20-cent winner to a 6 or 8 cent loser. So there you have it. I guess there's just no free money. I'm not as smart as I thought I was. I guess everybody else saw that as well. So point being is that if you do happen to notice some of these strange relationships, whether it be a stock, a synthetic stock, in the case of an earnings thing where it looks like there may be some kind of free money floating out there, or sometimes in calendar. I know in the VIX, sometimes there's calendars there that if you don't understand how the VIX product trades, it can look very interesting where you can buy a calendar for credit. Be real careful, because sometimes when stuff looks a little too easy, there's generally a reason why these prices are priced the way they are. So anyway, that's my 11-minute roughly recording today. This is the first one in a series, so hopefully we'll have a few more going, and I'll talk about different topics. If anybody has any topic they want to go over, please shoot me an email. I'll be more than happy to cover that. So that's it. Listen, have a great weekend, and I will report back soon.